Joining us with this week's Ag Week Market Extra is Tim Petry with NDSU. Let's talk about trade first of all, because the uncertainty has impacted all of the livestock markets, obviously. But I think a lot of people think that the markets have handled this situation pretty well overall.
Yeah, I guess that's the case, except, the volatility. I've had many calls from livestock producers say, why did the futures market go down the limit today when the cash market is strong or whatever? Well, the futures market is reacting to international trade issues and world issues rather than the supply and demand right here in our country.
That's right. As far as the trade situation, hogs obviously are much more reliant on exports than we have even with the beef sector, right, though?
Yeah, that's right. Over 30% of our pork is exported compared to 12% of our beef. And so, yeah, it impacts a lot more. The impact does come back to the beef industry, however, because pork is a competing meat. And so if we can't export it, we have to eat it here. Prices have to go down and so on. So the entire meat complex are watching all the issues. But yeah, pork is very, very dependent on the export market.
And the cattle market volatility in part has been due to the weather, and we do have some drought areas around the country that are impacting slaughter rates and whatnot, aren't they?
Yeah, that's right. Very dry in the southern plains. And so, yeah, our cattle on feed by March was up 9% because of the drought that started in the southern plains, and the winter wheat dried up, so the cattle had to go into the feedlot. So 9% more cattle on feed in March means at this time of the year, in June, we just did 9% more cattle slaughter. And so, yeah, that's weather is very much impacting us.
So do you feel like we're moving through this wall of cattle, that so-called wall of cattle, pretty well or not?
Oh, yeah. Seasonally, we always do increase cattle slaughter into July, opposite of hogs. And so, I'm not a believer in the wall. I'm more of a looking at the seasonal. And yeah, we did increase seasonally 650,000 head weekly average in June. And that's the highest since 2013. So yeah, but I think we got through it pretty well. Yeah. Fed cattle prices have declined since March, which again is a normal seasonal thing. We usually see our seasonal low now, and 107 last week was the lowest, since back in quite a while. So yeah, I think we're doing okay given all the issues that we're facing.
And demand has actually been very good for beef, hasn't it?
Yeah, absolutely. Demand, particular export demand. The problem on the export side is we don't get the information for 2 months, so we're still back in April, which we set records. Now, on Monday, the new report for May will come out, but we're expecting on the beef side for that to continue to show record exports.
Now, the dollar index has creeped up, though. Has that impacted our exports, do you think?
Yeah, the dollar's been creeping up, but I don't think that's had a big impact. It's more the other issues and the tariffs and the trade and, how is that going to affect things? But yeah, we are watching the dollar, but I think that's had a very minor impact so far.
Hog numbers, let's move over there. Hog numbers have also been very large, have they not? In fact, the whole meat sector, and so that also has an impact on the cattle prices.
Yeah, absolutely. We have record production of pork and chicken for that matter, and now probably beef. So yeah, the pork industry has been increasing quite dramatically, and several new slaughter plants being built, and a lot of that was anticipation of the China market, and we aren't alone. Europe increased and other competitors, and so yeah, there's a lot more pork for us to sell, and that's just kind of a cyclical build-up there.
So Hogs and Pigs report did show that we are going to have expansion continuing here. And so when are we looking at the biggest numbers to start coming at us again here? Because seasonally we've pulled back a little bit in terms of numbers.
Sure, seasonally in July, end of July, we always pull back, and that, of course, helps the cash market, which did ramp up quite nicely here in the last month or so. But yeah, from now on out, I think we peaked, and we'll continue down into November and likely see the seasonal lows again in November. And we'll be 3% higher on hogs pork production by November than last year, and so that's something to look at in prices. And then we threw in the international trade thing. Yeah, it's going to be interesting to see what hog prices do by November.
Has demand been holding up as well in the pork sector as it has in beef?
Yeah, it's been holding up pretty good there given the amount that we have. So yeah, we thought that the tax rates that were go down would help things out, but now gas prices have inched up as well. It's kind of taken that away. But yeah, the entire meat complex has really seen a good demand there, and we have lower retail prices than last year has funneled into that, and so yeah, consumers have stepped up to the plate. The economy is doing quite well. Unemployment is going down. That all adds to the meat demand.
So let's talk about outlook for third and fourth quarter, first of all, on the cattle side.
Yeah. Okay, yeah, we're facing some headwinds there, obviously, on the cattle side with the record production of all meats and record beef production. And so we'll see lower fed cattle prices than we saw last year. And, USDA's been predicting that for some time. But, I mean, the bottom isn't going to fall out unless trade issues go berserk on us or something. But seasonally, we usually do see a pickup in fed cattle after the seasonal low. Now in July, we're at 107. But I think we'll see just much more moderate increase here. On the feeder cattle side, we do have a bigger calf crop, close to 1 million more calves this year to deal with, and again, weather, that's all going to affect us. But 60-cent decline in Dees corn futures, although not good for corn producers,
right,
and has been really good for feeder cattle prices and helped them, and we're back to levels that we were in March. On the calf side, we continue down to a seasonal low in November, and I think we'll see that. There's such a wide range in feeder calf prices in the fall. Everybody, what are feeder cattle going to be in the fall? Well, we have,
right,
for the same market class, we have a $20 to $30 range in prices for all the factors that affect the market. So I'm saying let's now, for planning purposes, do about 10% lower on calf prices than last year. So, if you sold a $180 550 to 600 pound steer last year, that'd bring them down to about 162. And then we'll see. We've got a lot of things. Corn isn't in the bin yet, and a lot of trade issues. But we're going to see lower prices, but still, given how the industry has expanded and all the other issues, it would still be profitable levels for cow-calf producers, maybe unlike more so on the grain side.
And on the hog side, what kind of pressure do you think we'll see in prices the rest of the year with the number situation you just talked about?
Yeah, they're going to be under pressure, and so they're going to be below break-even prices quite likely, unlike on the cattle side. So yeah, there's going to be a struggle, particularly as we get into October and November, the way it looks now.
All right. Well, we appreciate you joining us. Thanks so much, Tim Petry with NDSU. That's our Ag Week Market Extra.